Duncan, welcome twice. Number one to Switzerland and Zurich, since we just relocated.
Thank you.
And welcome to the Hedera Day here in Zurich at Trust Square.
Thank you for having me.
Pleasure.
Appreciate it.
Thank you, thank you. So Duncan, before we start, Duncan, he's a dear friend of mine, one of the great champions within Hedera ecosystem. He served at the governing council, representing Aberdeen, one of the most reputable asset management companies out of UK. Now he recently joined 21 shares out of Zurich. Duncan, why don't you give us a quick introduction about yourself and what you are working on and where are you?
Yeah, can do. Okay, so I mean, a bit of background on me. I'm an investor by background, so I'm a fund manager. I invested money in hedge funds for many years, and then ran systematic hedge funds before building the digital asset business at Aberdeen. And hedge funds is how I got into crypto. So in 2016, when they were starting to allocate, that was kind of my first introduction. Aberdeen is a 200-year-old company, so big global asset manager. You can imagine that a 200-year-old company in 2016 maybe wasn't ready for crypto, but because it was so old, and just because of the nature of financial services and asset management, it had built up many layers of complexities, operational inefficiencies over the years, like many other financial services firms. So, looking at the technology behind crypto, it was pretty clear early on that there were going to be some kind of advantages there if we could really apply it properly, and that's kind of what got me into it, and then led me on this deep journey into pure crypto. And
since you have been in the space since early days, so from your perspective, how did you see the evolution of digital assets, like from a new digital asset class, or let's say a new asset class within financial institutions and asset management companies, towards where we are now, and what is your prediction going forward?
It's been a journey. I mean, the first thing I'll point out is that you called it digital assets.
Yes.
Right. So, like I mentioned,
we had several conversations. I remember back in 2016. At the time, I was still at EY, and then some used to use it virtual assets, some crypto assets, some digital assets, and then someone from the senior management said, "You know what, guys? If you use crypto, then probably that's going to be the last meeting. If you use virtual, it kind of has a negative naming. Let's use digital assets. Is perhaps the right."
It's semantics a little bit, but I mean, it's kind of like a marketing and a risk thing. We had the same thing in hedge funds, by the way. So we renamed our hedge fund business about 3 times because at one point hedge funds was a dirty word. But I think it's indicative of kind of where you are in the cycle when you're comfortable saying certain things. So I've seen it go from crypto to digital assets and crypto back to crypto again. One thing I would say about the evolution is, I was probably quite naive in thinking that everybody would see the opportunity that blockchain can bring to, maybe not just financial services, but other companies. I think I probably felt that things were going to move much, much faster. But I wouldn't underestimate the inertia that can come from, let's say incumbents that want to defend their business or have got kind of too good a ride working on the old infrastructure. And so it has definitely taken longer, I think, to see big adoption. At the same time, the changes that we've seen over the last 12 months within financial services have been not even 12 months, right? We're talking, honestly, like whether you like it or not, since the US election, have been massive. One of the big blockers, I would say, has been US banks not getting involved, particularly in public chain. And that's changed big time. And I think right now the story is payments and stable coins, but that will evolve over time.
Amazing. That's I can confirm as well. So we see massive adoption coming. And in fact, after Donald Trump has been elected, it kind of gives some sort of a push towards adopting these technologies. Now back to, since we are talking about digital assets and all the naming, crypto, digital assets, and there is also semantic discussions around blockchain and DLT. So we all know that blockchain is a subset of DLTs. From your perspective back at the time at Aberdeen, and I know you have served for many years as a representative of Aberdeen at the Governing Council, and you did an amazing job as a co-chair of the MIMCOM.
Thank you.
I'm a big fan of you. So what was the key reason for Aberdeen to decide to join the governing council, and why the governing council of Hedera, and why not, for example, Corda or R3?
Yeah, I mean, maybe to start with, like, why do we even want to work with Hedera? Full stop. So we started looking at like which chain to use for tokenization, probably end of 2021, and so we did a typical due diligence you'd expect. I mean, my background is as a kind of analytical mindset, and so myself and the team did work on kind of the options that were out there. We were very clear that we wanted to be on a public chain. There were private options. You mentioned some of the private options there. There's definitely use cases for them, no doubt, within organizations. But we felt very strongly that the future was going to be on public DLT. And so we had to look at what was out there, and we were thinking about growing a large business, a business that needed to scale. And so we had to look at the simple things, the throughput, if we were going to have securities tokenized, the settlement time as well for some of our funds and other funds, and the cost, and being able to, if you want to build a strong long-term business, being able to model out the costs is really important. So some of those things, like the fixed costs of Hedera, were really important. I would say the main driver, it probably won't surprise anyone here, but it's the governance. It was just so clear. We knew that it needed to be public, but we also knew that it needed to be able to sort of integrate with our service providers who were large corporates, and something that our clients would be comfortable with. So that was the driver for choosing Hedera. And then we just thought, well, look, we liked it because of the governance. We're going to use this technology. Why don't we have a role in governing it? And we applied. We were fortunate to apply. I think we were probably the first asset management company to go on. And I think it was a fantastic decision. The company, well, hopefully we gave something back to Hedera, but I can tell you that the company, like Aberdeen, benefited a lot from that. There's certainly in my career, it's the first time that I've been exposed to kind of so many different sectors, like the companies across all different sectors, and learning about what's important to them and how getting ideas from them. That was very valuable.
Indeed. And I'm glad that you are saying that, because that confirms as well my experiences with enterprises and highly regulated financial institutions. There are 5 USP, so let's say key differentiators that we have at Hedera. So number 1 is the governance, as Duncan mentioned. So basically you have reputable organizations that are there hosting the node and managing the network and governing the software changes at the highest level. And with that, if you trust, for example, Deutsche Telekom or Google, and you trust, for example, Aberdeen with your assets and Standard Bank with your banking statement, then most likely you are going to trust these organizations to validate transactions on your behalf. Number 2 is the performance aspect of it. Hedera Hashgraph network is in a position now to process a minimum of 10,000 transactions a second, which is massive. And number 3 is the security level, and I believe we are the only public chain that has implemented ABFT as we speak today. Number 4 is, I would call it stability. Stability in 2 dimensions. Number 1, stability in terms of transaction fees. So it's denominated in dollar. So you don't have to worry that much about the Bitcoin price going up or down. So you know exactly, as an enterprise or as an SME or as a startup, you predict your transactions a day or a month or a year, and you know exactly how much it's going to cost you. And the second dimension of it is the fact that there will be no fork, because you have a network which is managed and governed by these highly reputable organizations. They were there for the last 50 years and guaranteed they are going to be there for the next 100 years. And last but not least is the sustainability aspect. We are the greenest public ledger out there. I believe we consume roughly 0.00003 watt an hour. So just to give you a comparison, who does use Visa or a MasterCard here in payments? So the moment you use your Visa card, you consume 100 times more energy, actually 1,000 times more energy than a transaction that Hedera consumes. So with that said, Hedera has been from day one set up to be an enterprise grade. It doesn't exclude startups or SMEs. It is enterprise grade, but still suitable for startups and enterprises. But moving to the next item, which we just mentioned.
Do you mind if I just add one more thing on that?
Please.
Because you've covered all like the points we basically looked at.
Yeah.
You can find like DLTs that are secure. You can find DLTs that are fast and are cheap.
Yeah.
It is really hard to find ones that cover all of these aspects. I think that's one of the actual true unique factors of Hedera, is that it does tick the box across the board.
Indeed.
And if you want to get like boring kind of financial services nerdy, there's things like, it's probably the only public, maybe one of the only public chains that is also OFAC compliant.
Yes.
So if you want to worry about, you don't want to have to worry if you're growing a big business or working with banks that you're going to send, gas fees to someone in a sanctioned nation.
Yes.
It's just a no-brainer to avoid that landmine.
And there is another one, which is I come to know, and I was lecturing at University of Zurich as part of the CAS, which is the compliance Certificate of Advanced Studies for the Compliance Center. In all my conversations and workshops with banks, there is like a hidden USP that I found out why the banks or highly regulated institutions love to work with Hedera, which is compliance and AML. So there is a feature at Hedera, whenever you deploy a transaction on the mainnet, you as an organization or as an individual, you can choose which organization within the governing council is going to process your transaction. So for your compliance department, and we all know the compliance within the banks, you have like high requirements that needs to be really fulfilled. So you as an organization or as an individual, you can pick up and say, I want Aberdeen, the node of Aberdeen to be processing my transaction, or it's going to be Standard Bank. And if you are a bank and then you delegate the transaction to a licensed bank, from a compliance perspective and from an AML perspective, you are fine. Unlike other chains, or let's say other models, where you don't know who's validating your transaction, you don't know whether it's going to be validated out of North Korea or any other jurisdictions that are, let's say, not desired. So with that said, this kind of a bunch of key differentiators or USPs of Hedera that makes the difference when it comes to enterprise adoption. And hence, the title of today is Governed Web3. It's not about just innovation, but how can you bring the governance and to ensure safety within Web3 era. Since you have been talking about tokenization, securitization, and assetization, and I tried yesterday to explain the difference between, so now we started between crypto and digital assets, then we moved to blockchain and DLT. Let me bring another discussion, which is assetization, securitization, and tokenization. In my very simple words, I will try to explain it. So assetization is basically like the high level, and then you have like two subcategories, securitization, and then you have tokenization, which is leveraging blockchain. Securitization, not necessarily, but it can be structured products. I came to know a number which is shocking to me a little bit around the volume of real-world assets that have been tokenized so far. I think we are talking below than $20 billion. Which is nothing in the capital markets. From your perspective, what is hindering and blocking institutions from driving real-world asset tokenization business? And what are the reasons from your perspective?
Quite a few. I need to learn to read upside down so I can see what you can ask me before you ask. A number of things, right? So it depends what it is. So there's like the tokenization of an asset and getting that out there. I mean, that's the one that we kind of all talk about. That's the one that kind of every asset management firm and bank buys into. I would say that the technology is not the problem. And I would argue that the regulation is not the problem either. I hear a lot of complaints about regulators. I don't see anyone doing anything like what they could within the existing regulations. And I'm talking about right now just about even just UK and Europe. Regulation in Europe is pretty good actually. The US can be a little bit more challenging, but there's still more that can be done. So I would say that that's not the issue. The issue is connecting everything together. Like there are no financial services firm that operate on their own in a silo, right? They don't control the full value chain for an investor. So you need to work with service providers across, your whole kind of whole value chain, And some of them can be resistant to that. Like I mentioned, they can really they will say, "Oh, I want to build it myself." They will not want to connect with kind of the tech startups. and they have been building it themselves, so it is coming. And then I would say that the critical thing is reaching the end investor. Like at the end of the day, somebody has to buy this stuff, and you need to have good product market fit as well. You have to have the right assets for them. Ideally, they don't even know that they're buying something via blockchain. They just see it. In a perfect world, they would probably just buy it through their regular brokers. If we're talking about an individual, and it's just more assets available to them, or better liquidity or whatever. And then on that topic of liquidity, one of the service providers that is never engaged with on tokenized assets is the liquidity providers. And for anyone that doesn't know that means we have market makers who are intermediaries that create liquidity. So they're like buying and selling to make a market on a product to create pricing. If you don't have that, when you go to try and sell your asset, you say, oh, hey, I want to sell my jeans to this room. Not now. What we call the spread, so like the price people are willing to pay versus what I think it's worth, is going to be massive. But if I have lots of jeans and I have a market maker here who's willing to buy and sell on a constant basis, that difference between what I want to sell it for and what people are willing to buy will shrink. I mean, this is at my company at 21 Shares. This is like the most critical thing of what we do, is to make sure our products trade well and trade cheaply. And that's not been figured out in the tokenized world yet. I believe the market makers will come. The banks will probably step in and do that. But absolutely, that's critical.
But amazing. And speaking of which, that was actually my next question. From all these, let's say, I mean, people started buying crypto and trading digital assets and crypto assets in crypto exchanges, crypto OTCs. But in the last years, we have seen some sort of institutionalization of the offerings of crypto and digital assets. And 21 Shares is one of globally leading organizations when it comes to structuring products, basically putting structured financial products that are bankable, that you can put in your balance sheet. And it gives you some sort of a comfort, like as a bank or an institutional investor, be it a family office or hedge fund or asset manager, to invest and buy this type of products, because you buy them, they are not on a crypto exchange or on a wallet, but they are bankable. From your experience at Aberdeen and your impressive position now at 21 Shares, would you see a lot of traction when it comes to this type of structured products, ETPs, ETFs, AMCs? Can you share some insights in this area?
Yeah, definitely. So, like as you mentioned, that our job is to make it easy for people to get exposure, right? We believe that blockchain is a transformational technology that is. Think about previous transformational technologies. Yes. Who benefited, like private equity, venture, sovereign wealth, like the big investors, not individuals. And so crypto changes things, because now individuals can get exposure to this asset class. Today, so I can just break it down for you. Like we're the largest provider in Europe. We have just under $10 billion. I think we're like probably second largest in the world. Half of our assets are retail, half are institutional in Europe. So institutions are really coming. They're mostly hedge funds, they're mostly prop desks, they're mostly wealth managers. The big pension funds are also starting to look at the space. What they're buying today, it probably won't surprise you, is Bitcoin. Right? That's like what people allocators are first going to add to their portfolios it's going to be Bitcoin. It's the proxy for the crypto industry. But the more sophisticated investors are looking outside of that. Today, our largest product in Europe is actually on Solana. We launched it in 21, so that's pretty early in the Solana days. But we see more and more interest for projects that have a better investment thesis. So like something more interesting that are specifically like on certain use case plays. Yes. So previously, like taxonomies didn't really matter because every crypto traded the same. That's actually starting to change, and we have investors who are more interested in tokenization, the payments theme, even things like gaming. They have real interest in. So I think it's going to change over time. Amazing.
It's good to hear, and it kind of resonates with what we are witnessing in the market. Duncan, since you are here in the room, and I want to give the chance to the visionary thinkers, founders, and inspiring entrepreneurs that we have here in the room, if we would like to ask you for an advice how to enter the digital asset space, what is your recommendation to the audience here? Like where to start with?
Like to get involved in blockchain and
digital assets.
Oh, okay, that's good. I thought you were going to ask for investment advice, and I was going to say. Look, I would say meet as many people as possible. Be really curious. I found the crypto world to be super open. I mean, it's like not in hedge funds. Hedge funds, nobody wants to talk to you. They don't want to share anything. In crypto, people are so generous with their time, right? Genuinely. I think if you want to build something and you want to sell it to, I mean, I can only really speak for financial services, but if you want to sell it to financial services, to large companies, make it simple, like easy for them to understand. Not that they're not smart, they are, but it's not their core subject. When you're selling to a company, don't just think about what is good for that company. Think what's good for that individual at the company you're selling to, because they will have their own objectives and goals, and you need cheerleaders in those enterprises to get you access to the right people and to support you. And then also think about who those companies work with. Can you like be truly plug and play, or is it going to require a big operational uplift? Because I think that just the latter is just going to be a much harder and more challenging road. But those were some of the things I would say.
Thank you, Duncan. I think with that we are coming to the end of this exciting fireside chat. Do we have like 1 minute for any questions? I think let's take advantage of his presence here in the room. Any questions? Okay. Any questions? Okay, good. We have Valentina. I have a question. Please.
It takes time. Like basically you need the first to come in and to start making a market. I mean, realistically, they probably don't see enough buyers and sellers on both sides to make it worthwhile. And if you really want this to happen, I think I've probably said this before a number of times, is like the asset managers probably have to see themselves as the initial market makers on this. Legally, that can be a challenge, but they need to be the buyers. They need to be willing to provide liquidity on their own products. Otherwise, it's hard to kick off in a completely new market. But once, maybe just the other thing is to make it ideal for the market makers, they have to have good transparency on the underlying. So it's one thing tokenizing the ownership of an asset, it's another thing the underlying data. And once you have that, you have more visibility for them to really make a price on it that they think is going to be accurate. But it is a slow and painful process. But once it starts, it's actually quite exponential, because you can imagine it. I mean, like nothing happens, and then all you need is a few in the market, and then everybody wants to be in it because they see the opportunities to make money.
Amazing. Any other questions, excluding financial advisors? Okay, I don't see. You have one? Okay, good.
We're not saying, I guess we're saying stablecoins are not, they are already mainstream, are they? Should I bet on digital identity? I don't know. I feel like that's been around people have been talking about it for so long. I hope it's the case. I'm going to say deepen. I mean, I really love it. I think the world needs it. I mean, we should really look at blockchain as being, having like supporting good causes, and there's lots of people that are cut off, let's say from a comms perspective, are cut off in this world. Yeah. And deepen it can be a solution to that. So it's one of the ones that I really love.
Thank you, Duncan. Okay, any last question? Okay, I see some hesitation. Okay, Isadora.
I hope we get to a point where we don't need to talk about whether something's permissionless or permissioned or even private. The original thesis when I was at Aberdeen was that everything should all be public. Public permissioned is the right way to go now, and eventually everyone will become comfortable with permissionless. But permissionless is nowhere near, like the solutions are not there for, let's say, KYC if we're talking about like people buying the tokenized assets which become securities, the solutions are not there yet today for, let's say, zero knowledge KYC that are good enough. And so if we want people don't want to give up their identities. They don't want them visible on public blockchains. We need to have solutions to that, and permission chains can provide some can solve for that a bit. But like I would say, the whole thing on permissionless, let's just wait. Once people get over this past thinking about this, and they start to look at, when the regulators actually start to look at the companies that are using the different chains, I can't wait till they start following the money and like the threads of where trades have gone on fully permissionless chains. Just coming back to what I was saying around like the gas fees, they're not even looking at that yet, but they will at some point, and people should be worried.
Yeah, and maybe just to share with you some insights, since we were attending Point Zero Forum, and it's a public information anyway. And I met the CEO and the founder of Corda/R3. He made a statement today. Actually, yesterday he was in a panel, and then he confirmed that today they are transitioning from a private permissioned chain to a public permissioned chain, basically confirming the vision that we had when we established Hedera Governing Council back in 2017 and 18. So the answer is public, basically make it open, transparent, accessible to everyone, but at the same time you still address the needs of highly regulated organizations or enterprises, governmental entities, by setting up a governing body around it. So with that said, I think we're coming to an end with this exciting fireside chat. Thank you, Duncan, for making it happen. Please help me give him a big thank you for sharing his valuable insights with us.
Thanks, Kamal. Thank you.